The stock market is up big ever since news of the presidential election results has been released over the weekends, and also along with vaccine news from Pfizer. Straight away on Monday, the market gap up all the way beyond previous resistance line that have been drawn over here and form a big, huge red candle that can be seen over here. And afterwards, the market has been consolidating and finding for a clear direction. So with this huge jump in the broad market, we have also observed a weakening in the uptrend of technology companies such as Apple. And despite the huge gap up that we see from SPY on Monday, Apple did not follow suit. And this is also the same for many other technology companies such as Adobe, Microsoft. Similar pattern is making consistently the same highs for the past few weeks now. And also Netflix, which is still in a consolidation. All right, so these are the tech companies for you. On the other hand, we have the cyclicals and also the financials, which has been up big time, just like SPY itself. Ever since on Mondays, prices have gapped up hugely for Bank of America, and whether or not this will last, we will have to wait and see. Previously, we have also seen banks like Bank of America and JP Morgan gapping up significantly once and twice over in June and August, but these spikes did not last, and prices soon fell back to their moving averages and found support on the horizontal zones. However, this time things might be different. After all, we can see prices forming somewhat of a brief support at the 2650 level. First of all, prices gap just nice above this level and form a huge bullish green candle. And this is in contrast to the huge bearish candle that we have seen in SPY. So despite the broad market selling off on Monday, immediately after the gap up, the financials like Bank of America, it behaves differently. Strength can be seen in this sector. And subsequently, when it retraced slightly, it also found a support again, forming a bullish pin bar on the 2650 horizontal support level. These can also be seen in other financial companies like JP Morgan. Therefore, you could say that maybe funds are rotating slowly out from those stay-at-home tech stocks and tech companies and slowly into the industrials and the cyclicals. So this will definitely be something to look out for as we move on forward. Alright, so with that, the things to go through today for the portfolio will be as such. 3 Bank of America cash secured puts for 2 of them. They will be expiring worthless without a problem. And lastly, we have the Bank of America covered call at 25 strike. This covered call was sold about a month back against my stock position that you can see over here. So with the gap up in the Bank of America, this will definitely require some attention from us. So let's attend to this first, Bank of America, and if we go over to the option chain, we will definitely have to roll this out. So right now it's going for 207 to 212, so let's just buy it back. And again, we will be interested in the option that expires 1 month out from here. So for that, maybe let's look at the 18th December, 35 days to expiration. For $2.12, we could not roll it up, unfortunately. 26 strike is only going for 160, 165. So the best we can do is only roll it up to the 25 strike again. So by doing that, our strike prices do not change, and we will need Bank of America to fall back down to $25 before our covered call can expire. But the good thing is that by rolling it in this way, we can collect a further 29 cents to 30 cents of premium. So let's go ahead and do this. I'm going to click on confirm and send, and let's just hope that it gets filled. Now, if we go back to the chart, although Bank of America is quite overextended right now after the gap up, prices have shown to be briefly supported by the 2650 level. So with that, I guess it should be safe to sell another cash secured put for Bank of America at perhaps 26.5 or even lower. But let's look at our premiums for that. If we go over to the 11th December, 2650, you can still fetch a 71 cents to 75 cents premium. So that's pretty good. And for the 18th of December, the strike intervals are quite large. So perhaps we would like to avoid this. And let's go over to the 11th December instead. I'm just going to sell the 26.5 strike at 74 cents is fine. Alright, so we just leave it here to get filled. Alright, so that's Bank of America out of the way. Next, we have the Apple calendar trade. So for this, I've rolled it out earlier. Previously, we have the 116 strike call that is expiring today, 13th of November. right? And this call was going for about $2.87. So what I've done is to roll it out and up into the 20th November 117 strike call. And for this, I've sold it for a premium of $3.27. So you can see I have collected an additional 40 cents in premium. And let's hope that Apple can retrace back down to 117 by next week. And then we could collect the full premium for this. Otherwise, we'll just continue rolling out and up and out and up until it expires one day. And next, if you recall, last week I mentioned something about the Starbucks dividend capture strategy. So unfortunately for this, I've missed out on the dividends. The dividend record date was on the 10th of November, but for some reason, I've seen it as the 11th of November instead. I was actually waiting for this candle to buy. But on that day itself, when I came back and then I see, oh no, dividend has already been paid out, then it's like too bad, right? Because on this day, Monday itself, when I see this gapping up and the overextension of prices, I thought perhaps it would be good if I could wait a little bit for prices to fall and retrace back and buy at a lower price to collect the dividends, right? And unfortunately, because of that, we will have to stay out of this round of dividends for Starbucks. Next up on my watch list, I'll be looking at Johnson & Johnson, J&J. For J&J, dividends will be coming out on the 23rd of November. Let's not get this wrong again. Dividend will be $1.01. Stock price is currently at 149, slightly less than 1% per payout, but definitely more than 0.5%. So this is a criteria that I've set for stocks that I want to collect dividends on. Alright, so 23rd of November is still a week away. And with that, we could look at selling some cash secured put to collect some premium and lower our purchase price when we are about to buy it. So currently it's going at 148. Perhaps I will be looking at selling the 145 strike price. So if we go back on the chart, 145 will be somewhere around here, around these 50 and 200 moving averages. So should be rather safe. And in fact, if you want, we could go down even lower to the 143, 144 strike. But if we do that, then premium collector will not be that attractive anymore. It will only be like 30 cents to 40 cents, which is $30 to $40. So I'm just going to sell the 145 strike and then perhaps for 54 cents, just 1 cent below the ask. So next week on the 20th of November, we'll have the Apple, Bank of America. Now ignore these four positions over here. These are meant to be bull put spreads, which are trading positions to be included in my trading portfolio. So just ignore them. They are not supposed to be here. And then on the 20th of November, we also have our Yum China cash secured put at 52.5. This is also going to expire worthless without much problem. If we quickly go over to Yum China, so prices has reached the previous high, which is about 58.75, and currently it seems like it is going to retrace back down. So I'm going to hold on to selling cash secured put for this stock, and hopefully when it comes down further, then I'll sell perhaps one cash secured put at the strike of 55 or 52.5 if the premium is still attractive then. Generally, when you sell cash secured puts, you want to avoid selling when prices are overextended, and you want to sell at ideally the low of the wave movements. So if you do that consistently, then your cash secured put can expire easily, and then you can get to collect the full premium. Unless, of course, you doesn't mind owning the stocks at price of 57.5, then go ahead, you can sell a cash secured put at 57.5. And when they fall below your strike price, just get assigned the shares and purchase them with a slight discount from your premium collected. Alright, so that's all for today's session. Hope the week has been going well for you and your portfolio as well. Thank you so much for watching. Help me out by smashing the subscribe button and turning on the bell notification so that you'll be the first to receive updates on when new content are being uploaded. Thanks for watching, and I'll see you in the next video.